Hello friends, welcome to this video where we'll be covering a very basic topic in accounting known as the basic accounting concepts. So we'll be doing this in several parts or several videos because this is quite the basics and we have to understand it very clearly. So let us go step by step. Come, let us go into the video. So first, what are these accounting concepts? For any task, let it be a simple task from making a coffee to a greatest task of managing an organization, we need a set of instructions or guidelines which tell us what to do, when should we do that, and how should we implement it. So these set of instructions are like the framework and it is quite common to all. That is, everyone accept that, and usually it is framed in such a way the set of instructions or guidelines answer to all possible doubts that could be incurred in the process of learning, or it will give solutions to all possible circumstances. See, for example, to make a coffee, you can make coffee on an induction stove or on a gas stove, but the procedure, the instructions for both of them will be explained to you by elders when you make coffee for the first time. So accounting concepts are like these instructions which say when to do, how to do, and what to do in each method. That is, there are various methods in accounting too. So these accounting concepts clear all our queries in this manner. So here the task that we need to accomplish is accounting or the accounting cycle, and the guidelines are called as accounting principles or accounting concepts. Now, accounting concepts, there are 13 basic accounting concepts and they are generally accepted by everyone and they are known as generally accepted accounting principles. So, the basic purpose of these accounting concepts is to ensure uniformity in the financial statements prepared by several firms. Because there are many firms, and if each firm prepares a financial statement according to their own wish, then we can't compare the statements between the firms, and firms cannot compare the financial position between themselves. So, in order to avoid any confusion in that manner, these accounting concepts serve as a basis to create or to maintain a perfect financial record. Now, there are three terms, that is accounting principles, accounting concepts, and accounting assumptions. All these three are like various terms, but all the three mean more or less the same. All the three refer to these basic principles. So there is no need to hype about these terms and get confused with the same. So here in this video, we'll cover the first three accounting concepts alone. The first one is business entity concept. As an accounting student, when we get into this process, the first thing we have to register in our mind is we are different, our business is different. That is, whatever process you do, let it be journal, ledger, trading account, profit and loss account, trial balance, whatever it may be, or whatever transaction it may be, you must remember that you are different from the business. Because many of the times we think both of us are same. Because imagine if you are the owner of a business, even if you are owning the business, you are different from the business. This says that this concept itself says the same thing. The owner and business are two different things. So business is also like a person. It is an artificial person and you can't say it is my business. And similarly, like for example, think we are buying furniture. You are buying furniture for your office. According to you as a owner, it is an expense for you because you are spending money and you are buying furniture for the business. But from the point of view of the business, those furniture is an asset to the business. So that is why we say whatever transaction you record, you must record it from the point of view of the business and not from the point of view of the owner. So imagine you're the owner and you have a business. As I've given here in quotes, the first thing you have to register in mind is if you are owning a business also. I am different, my business is different. Whatever I do, I will do from the point of view of the business and not from the point of view of the owner. Because according to the business, that is the artificial person, even the owner is considered just as a creditor. That's it. Because owner has lent money to begin the business. That's all. So if your capital is 5 lakhs, according to the business, you are a creditor who has lent 5 lakhs. Instead of paying interest, it will pay you in the name called profit. That's it. So this is the basic and foremost concept in accounting. The second is money measurement concept. So the purpose of doing a business is to earn money, and the purpose of preparing the financial statements is to know the financial position of our concern. So the all items, assets and purchases are recorded in monetary units. As a owner, or like you may say that I have 2 cars, I have 3 bungalows, I have 4 lands, each 2 acres, etc. etc. But in a balance sheet, you can't record saying land 4 acres, car 2 numbers, bungalow 2 numbers. No, you will record only its monetary value. So if you have 2 cars and if their value sums up to 25 lakhs, for example, you will record only 25 lakhs. And similarly, if you have purchased for your, say if it's a textile company and you have purchased 500 shirts, you will not record it as purchases account debtor 500 shirts. No, you will write the amount or the value of those 500 shirts. So everything you record in the books of accounts is recorded in the monetary value, monetary units, and not physical units. So this is the second concept. And also, when we say monetary units, we also mean to say only monetary transactions are recorded. That is, transactions which involve money or which will create the involvement of money. So when I say transactions which involve money, you may get a doubt. We record credit transactions also. So there we do not involve money. Why do we record? We record it because it creates an involvement. So a credit transaction will not remain as a credit transaction forever. If it is a credit purchase, at some point or the other, you have to pay back the money. So it creates a place for money. So you record that credit transaction. At the same time, the example I have given here is if you say that the manager and his boss was not on good terms, they both had a fight, you will not record this transaction. This is not all a transaction at all. This is just an incident. But at the same time, if you say the manager and the boss both were paid salary, so this is a monetary transaction because you have involved money in it and you have paid them, and it is an expense for the business. At the same time, it is important that in both the transactions, both of them are involved, the manager and the boss. But only the monetary aspect makes whether a transaction should be recorded or not. So this is the money measurement concept in accounting. Next is going concern concept. As the name suggests, going means the business keeps on going. Concern obviously refers to the business. So from this point of view of concept, we say that the business will stay for a long period. As a positive owner of a business, every businessman would want his business to last for a long time. So the same thing is what this concept also states. This states that the business will stay for a long time and all transactions are recorded within the same perspective. This only instills the concept of deferred revenue expenditure. To explain more, that is, it enables the apportioning of cost incurred on assets or expenses. To be more specific, apportioning is, that is, you are separating the cost. For example, if you have incurred rupees 10 lakhs in bulk, instead of writing rupees 10 lakhs at one time, you are apportioning it as parts of 2 lakhs and writing it 5 times. So, this is the simplest meaning of apportioning. So, why do we apportion? We'll just see in the next example. So, this is actually done because the business is believed to exist for a long period. You cannot apportion for 5 years if you believe the business to exist only for 2 years. It is impossible. So the basic assumption is you assume that the business exists for a long period of time. Here, let us take the example of an advertisement expenditure. So advertisement expenditures are usually incurred in large amounts. As I said, it amounts to 10 lakhs in the year 2010. So you will not write advertisement account debtor, or you will not write the expenses as 10 lakh in 2010 itself, because it is a very huge expenditure and it will almost nullify all your income, and it will obviously lead to a huge loss in the business. So what you do is, in the accounts, in the year 2010 you write only 2 lakhs. In the year 2011, you write 2 lakhs. In the year 2012, 2 lakhs. And the same way you continue till the year 2014. By this way, in a span of 5 years, you have written off, that is, you have deducted the whole 10 lakhs from that expenditure. So, by this way, we are apportioning the expenditure over 5 years. That is, we are separating the bulk amount incurred for 5 different years, so that we can increase our profit and show in the financial statements. So when can we do this? For example, you have started the business only in 2010, so you are apportioning it for 5 years. But if you believe the business to exist only till 2012, can you apportion this way? No. So the basic assumption is your business exists for a long period of time. So you can apportion your expenses and amounts incurred on assets throughout the benefit period. Usually the advertisements expenditure incurred will not give benefit for one time alone. The advertisement stays in the mind of the people, and it will induce the people to buy again and again. Therefore the benefit of the advertisement is also received for quite a long time. So its expense is also apportioned for the long period of time. So with this we come to the end of this video. Here we have seen what are accounting concepts, and we have covered only the first 3 accounting concepts. So please stay tuned to Intellify to know more in detail about each of the accounting concepts. Hope the basics of this video was clear and easy to understand. So till we meet again in the next video, this is Sangeeta Selvan. Thank you.